So you're here because you want to get a real handle on Tesla stock, TSLA,
Mhm.
right? And you need the important stuff. Like now, without wading through endless reports.
Exactly. That's what we're aiming for today.
We've done that waiting for you.
Yeah.
We've taken a real deep dive into the latest stock info, what analysts are saying, their Q1 earnings details, and the big news stories swirling around.
Yep. Our mission is basically to pull out the key insights you absolutely need to know about where Tesla stands right now and maybe where it could be heading.
All right, let's jump right in. The stock itself, last close was $250.74. And interestingly, that was up, what, over 5% in just one day?
Yeah, 5.37%. Pretty significant single-day move. And the 52-week range really tells a story too, doesn't it? From about $158 up to nearly $305.
Quite the roller coaster.
Definitely. So how does that $250 price compare to like valuation estimate?
Well, it's interesting. The specific report we analyzed puts the fair value at $261.32, so slightly above the close. And their own price target is actually right at that closing price, $250.74.
Okay. But what about other analysts? That's where it gets really divergent. The average analyst price target over the last 6 months is way higher, $324.04.
Wow, that's a big gap.
Yeah,
Really shows the different opinions out there.
it absolutely does. Highlights the debate.
Right.
Is it fairly valued, undervalued, overvalued? Depends who you ask.
So let's add another layer. The economic moat. The report calls it narrow. Can you maybe unpack that a bit?
Sure. So an economic moat, basically, it's a company's competitive advantage, like what protects it long term. Think castle defenses.
Got it.
Tesla's narrow moat comes from things like having a cost advantage in certain areas, their supply chain being pretty resilient, partly because they make a lot of stuff themselves, vertical integration.
And the regional factories they're building?
Right, regionalization too, plus the supercharger network, that's huge, and of course a really strong global brand, though maybe that's faced a few bumps recently.
But narrow suggests it's not, like, impenetrable.
Exactly. There are definitely risks. Executing on their huge plans is one. Supply chain problems keep popping up. And, well, competition is getting fiercer all the time.
Makes sense.
But what's really interesting is where they're trying to build future moats, potentially much wider ones. Think AI, like full self-driving, the whole cybercab idea, and Optimus, the humanoid robot.
Right. The big bets. High risk, high reward kind of thing.
Precisely. Huge potential upside, but also massive challenges to actually make them work at scale.
Okay, shifting gears a bit. Let's talk recent performance. Q1 2025 earnings. They missed expectations, right?
Yeah.
Revenue and earnings both.
They did, yeah. The main reason they gave was these global factory updates, getting ready for the new Model Y. Apparently that meant lost production time.
Which means fewer deliveries.
Exactly. Fewer total deliveries compared to the previous quarter. And that directly hit their automotive profit margins.
So. Just fewer cars sold.
Well, partly that, but also something called lower fixed cost absorption. Basically, if you make fewer cars because the factory's being updated, your fixed costs like rent, machinery get spread over fewer units, makes each car seem more expensive to build.
Okay.
Plus, they got less revenue from regulatory credits this quarter. The zero-emission credits they sell, that was down too. They tried to offset some of it with pricing tweaks and incentives on the existing Model Ys, but margins still declined.
But it wasn't all bad news in Q1, was it, the energy side?
Oh, definitely not. The energy storage business was actually a real bright spot. Record gross profit, in fact.
Wow. Okay. Driven by what?
Really strong demand for their Mega Pack. That's the big utility scale battery. And people seem to really like the new Powerwall 3 for homes, though they apparently can't make those fast enough right now. Supply constrained.
So that site is growing fast.
Immensely. Management talks about scaling it to terawatt levels eventually. It really drives home that Tesla isn't just cars anymore. That energy segment is potentially huge for their future.
Looking at that future then, what are the big plans they laid out?
Very ambitious ones. For starters, fully autonomous paid rides. They're aiming to launch that in Austin using current Model Ys starting this June 2025.
This year. Wow. And then scale it.
Massively. The goal is apparently millions of these autonomous vehicles operating by the second half of 2026. It's a huge leap.
That really signals their confidence in FSD, doesn't it?
It certainly does. And related to that, they want to make FSD unsupervised, the version for personal use available in several U.S. cities before the end of this year, 2025. But they emphasize safety validation is key.
Okay. And what about Optimus, the robot?
Progress there too, it seems. The pilot production line is running. The goal? Produce thousands by the end of this year and then scale up to millions annually within 5 years.
Millions of robots.
That's the plan. Though they did mention facing some component supply chain challenges for Optimus right now, so we'll see.
In cars. Any news on the more affordable models?
Yep. Production target start date is June 2025 for those. They plan to use existing factory lines to save costs.
Which might mean a slower start.
Yeah, they hinted the initial ramp-up could be a bit slower doing it that way. And for the dedicated robotaxi, the Cybercab, they're developing this new unboxed method of manufacturing. Sounds like it's designed for extreme automation and really low costs.
Trying to revolutionize manufacturing itself, it sounds like.
Pretty much. But all these grand plans face some serious hurdles. Tariffs are a big one.
How do they impact Tesla?
Well, the energy business takes a hit on profitability because they use LFP battery cells from China. Tariffs make those more expensive, and tariffs also raise the cost of importing the manufacturing equipment they need for all this expansion.
Right, the CapEx.
Exactly. Capital expenditures are projected to be over $10 billion this year, and tariffs on imported machinery add to that burden.
What other risks are out there?
Ongoing supply chain issues, definitely. Like needing specific export licenses for permanent magnets from China, those are apparently critical for the Optimus Robots actuator.
Specific bottlenecks.
Yeah, and then there's the volatility in their other income, things like mark-to-market losses on their Bitcoin holdings, swings in currency exchange rates that can make the bottom line jump around.
Anything else? They mentioned something about hostility.
It did. Mentioned a negative impact on sales in some markets due to vandalism and unwanted hostility. Didn't elaborate much, but acknowledged it was a factor, though they quickly added that overall global demand interest remains high.
Okay, so a complex picture, lots of ambition, lots of challenges. How are analysts seeing all this lately? Price targets still all over the map.
Very much so. It really reflects the uncertainty. You've got like BNP Paribas Exane lowering their target significantly to $137.
Oof.
But then you have Mizuho Securities way up at $430, and Wedbush even floated a bull case of $550 if you fully bake in the potential of Optimus.
Yeah, huge range, but the average is still.
Still, that $324.04 figure we mentioned earlier, it just shows there's no clear consensus on how to value all these future possibilities against the current headwinds.
Right. Can we quickly touch on some key financials, just for context?
Sure. The report noted trailing 12 months figures, revenue around $97.7 billion, net income $6.4 billion, earnings per share, or EPS, about $1.82.
Yeah, market cap, still massive.
Oh yeah, $806.5 billion market cap, with the enterprise value pretty close at around $798 billion.
And growth trends.
Well, historically, obviously huge growth. But looking ahead, the projections reflect this phase, Big investments in R&D for AI, Optimus, new vehicles. That's impacting near-term profitability growth, even if revenue keeps climbing.
And that narrow moat rating ties back into this.
I think so, yeah. It suggests that while they're big and have advantages, they're not invulnerable, especially during this heavy investment, high competition phase.
Okay, so finally, the Q1 earnings call. Did it mostly just confirm what we've discussed?
Largely, yes. It reiterated the impact of those factory updates and also that vandalism hostility thing on the Q1 numbers.
And the margin pressure drivers.
Same story. Lower deliveries, the fixed cost absorption issue, fewer regulatory credits sold. But again, they highlighted the strong performance of energy storage.
Did they talk more about costs going up?
Yep. Confirmed they expect operating expenses to rise sequentially because of all the investment in AI and new vehicle programs like Cybercab, Semi, and the affordable models.
Okay. What else stood out from the call?
They re-emphasized the reasons for the volatility in other income Bitcoin currency swings. They repeated the CapEx guidance of over $10 billion and the tariff challenges on importing that equipment.
So acknowledging the headwinds?
Definitely. But also highlighting their efforts to mitigate risks through regionalizing supply chains. Though they admit vulnerabilities remain, like those LFP cells for energy and the Optimus magnets.
And the big timelines, Robotaxi, FSD, Optimus.
All reaffirmed. Robotaxi launch in Austin this June, aiming for millions by late 2026. FSD unsupervised, aiming for personal use in U.S. cities before year-end 2025. Optimus production goals. Thousands this year, millions within 5 years.
Anything new on FSD pricing or manufacturing?
They mentioned considering tiered pricing for FSD as it gets better, and they talked a bit more about the unboxed method for the Cybercab, focusing on high automation, low cost.
How do they see their edge and autonomy compared to, say, Waymo?
Their view is that their advantage lies in pure AI, camera-based vision, and the sheer scale of data from their fleet versus competitors using complex, expensive sensor suites on lower volume cars.
Interesting. And the brand damage, was that downplayed?
They acknowledge some impact in specific markets, but stress that overall global demand interest is still described as high.
Any other key sound bites? Maybe from Musk?
Well, Musk expressed belief that Tesla and SpaceX lead in humanoid robot development while noting China's dominance in drones. He also mentioned expecting to focus more on Tesla starting in May after apparently wrapping up work on DOGE.
Okay. And the overarching vision.
Still the same long-term goal. Autonomous cars transforming transportation and vast numbers of Optimus robots enabling, quote, sustainable abundance.
So summing up the call from an investor perspective, maybe some nervousness?
Potentially, yeah. Concerns likely center on the Q1 delivery decline, the pressure on margins, rising operating costs, that other income volatility, tariff impacts, supply chain risks for the new big projects, and maybe a slower ramp for the affordable models.
It really highlights that balance, doesn't it? Near-term pressures versus that huge, potentially transformative long-term vision.
Exactly. And the report's fair value estimate being just slightly above the current share price kind of reflects that tension, I think.
So, okay, wrapping this all up, Tesla's clearly in a major transition period, wouldn't you say?
No doubt about it. Facing real near-term headwinds, production changes, costs going up, external factors playing a role.
But at the same time, this incredibly bold long-term vision, right? All centered on AI, autonomy, plus big potential still in energy storage and these new manufacturing ideas.
Which leads us to maybe the biggest question for you, the listener, to think about. Given all this, the massive goals, the current challenges, what do you think is the single most critical factor that will decide Tesla's future success?
Is it cracking the code on true AI and autonomy? Is it mastering manufacturing scale-up like never before, getting regulators on board? Or maybe it's something else entirely.
Something to definitely chew on.
We really hope this deep dive gave you some valuable insights into Tesla today, helping cut through some of the noise out there.
Yeah, hopefully useful stuff.
And if you did find this helpful and you want more analyses like this, please do subscribe to the channel and hit that notification bell so you don't miss the next one.
Your support really does help us keep making these deep dives. Thanks for tuning in.